Hi, everyone. My name is John Pitts. I'm the head of policy for Plaid. Thank you so much for joining this webinar on preparing for open banking, the challenges and opportunities for financial institutions. A little bit about me and the other panelists to get started. As I said, I am with Plaid. I'm the head of policy there. I've been here for 6 years. I had the honor of setting up the policy team at Plaid. Prior to my time at Plaid, I was with the Consumer Financial Protection Bureau, helped set up that regulator as it was coming out of the financial crisis and the Dodd-Frank Act, and really got to dig in on sort of what are the key changes happening in consumer financial services, one of which is the increased sharing of consumer financial data, something that is leading us to this open banking moment and the forthcoming CFPB 1033 regulation to bring consumer financial data sharing into a regulatory framework in the US. A little bit about Plaid. We are a financial data network. We've been around for 11 years. We connect to around 12,000 financial institutions and thousands of fintechs to allow consumers to easily share their financial data back and forth. Around 1 in 3 American consumers are engaged in this right now on Plaid's network. And so we're really enthusiastic about the forthcoming 1033 rule and helping with our bank partners to bring open banking into the United States. Let me introduce those panelists now. First, from Capital One is Ursula Trilogan. Ursula is the digital product leader for Capital One, where she works on open finance and data sharing experiences for consumer and small business customers. She's been managing technical products and partners for over 20 years and has worked across telecommunication, philanthropy, and financial industries in both the US and abroad. Ursula, anything else I should say about you or you want to say about yourself as we're doing intros here?
No, I'll just add that, so my role here at Capital One is to lead our connected finances team, which is an enterprise team that is all about, the open banking capabilities for the organization. So I am deeply steeped in all of this wonderful topic material that we're going to be speaking about.
Equally deeply steeped is Anthony Burton from Truist. Anthony has been in banking for over a decade, with the majority of that time spent in the open banking space. For the last 2 years, he's been with Truist, where he leads all open banking initiatives for enterprise. Before Truist, he led retail open banking at Wells Fargo for 7 years. So over that career, Anthony has signed over 20 million, gosh, that's the future, not the past. 20 open banking agreements and launched open banking platforms that support over 7 million end users and 1 billion plus API calls. What else do you want everyone to know about you, Anthony?
I think you hit it. I'm striving for that 20 million on my data agreement. So.
Well, and the last thing I'll say is, like, if it's not obvious, Ursula and Anthony are 2 of the leading people at 2 of the leading banks in having done the work of figuring out how to make data access work even ahead of this regulation. They're also co-board members with me at the Financial Data Exchange, a organization trying to standardize APIs for 1033 and open banking in North America. So this is the deepest well of expertise that you could ask for in how banks should be thinking about getting ready for this rule. Let me do a little bit of scene setting before I get into questions here of sort of why are we here? Why are we talking about this? A year ago, a little bit under a year ago, the Consumer Financial Protection Bureau proposed a rule on financial data access. This is something that has been on the books in Dodd-Frank since it was passed, but has never actually had a regulation around it. So as over the years, the number of consumers sharing their data has grown, there's been an increased pressure to put a regulatory structure around that behavior and make sure that it's both safe and secure, but also serves the consumer right to access and share their financial data to increase competitiveness, portability, innovation in the market. I'm not going to read through the entire 299 pages of that proposal here, but I'll just give a quick summary of sort of what's in it. I think the core elements from my perspective are it really solidifies that the consumer has this right to share data. It mandates shifting from an outdated technology for retrieving that data, sometimes known as screen scraping or credential-based access, into high-quality, secure APIs for access, and requires that every data provider build those. It also builds in more consumer controls and better disclosures into both what data is being used and what it is being used for. With that, there's some real challenges and opportunities, hence the title of this webinar, for the industry, including how do you build out all of those APIs? How do you think about compliance in this new world where there's a regulation around data sharing? On the opportunity side, how do you start leveraging the possibility of consuming some of this data if you're a financial institution that has never used it before to help build or inform your products? So this is the core of Plaid's business. We work with Ursula and Anthony and people at another 12,000 FIs to help both solve these data out problems and also support customers of ours who want to build data in products, both fintechs and banks. We see this as a critical moment to align the entire industry and help the industry shift from this non-regulatory model of data sharing to a regulated, compliance-first, safe, secure, open banking framework. We've worked a lot with our bank partners, recently joined ABA and ICBA to help get some of this messaging and technology out there. And we're really excited about what the next couple of years are going to be like. Although I think we'll hear from Ursula and Anthony that excitement needs to be tinged with a little bit of like trepidation of how are we going to get all of this done. So with that as way too long of a lead-in monologue, I want to start just with a first question for both of you. You've both been really active in this space for a number of years, longer than a lot of other financial institutions. What do you think open banking really means for your business? What is the change, having done this already without the regulation, what's the big change that's going to happen for you once this regulation is finalized and in place? And Ursula, why don't I start with you?
Sure. Yeah, so thanks. Yeah, so as you mentioned, Capital One has been making investments in this space, in our technology, in our processes, and our customer experiences for quite some time. And I think, you know, the key for us was to make sure that we had sort of security and transparency control for our customers as real sort of foundational principles for us as we engage, you know, sort of as we went into this space, right? Those are really key principles for us around our data sharing. And I think though, as you mentioned, you know, a lot of what's in this rule sort of like does speak to that. It carries that forward. And so, you know, I do imagine that, you know, we're going to continue to want to ensure there's transparency in, you know, explaining to the end user what is the data that's being shared and for what purpose, which we believe is really, really valuable to gain the trust of your customers and to make people feel comfortable with this data sharing. I think there's a lot of trepidation around it these days, more so than previous, and that's really important. So I think for the most part, you know, we'll continue to, you know, approach this in a manner that we have. You know, there's just some places where we need to be a little bit more buttoned up, and there's some places where, you know, where we'll need to introduce sort of some new processes that we don't have today around things like, you know, engaging with the third parties in sharing those authorization disclosures and what is the information that's going to be shared. So, you know, I think for us, it's going to be a journey of improving what we already have to make sure that it lives up to the the high bar that the CFPB is looking to put into place here for the ecosystem.
Anthony, what about you for Truist? How are you all thinking about this from a sort of business impact and business strategy perspective?
Yeah, likewise, we really believe that we want to meet our customers where they are. So whether that's, within Truist, online, in a branch, on a fintech app, et cetera, we want to have a similar experience for them and meet them where they are with their data. And so the good part about the regulation is that I think it, like Ursula was saying, we're doing a lot of this stuff already, even without the rule. But I think what the rule does is it really firms up the fact that this is a legitimate channel and that we now need to lean in. It's going to, at the very least, will require care and feeding. But I do feel like from our standpoint that we really want to lean into this as sort of a transformational new channel for us in the coming years. So there's a lot of work to do that we have to do to be compliant. But we really do feel like not only giving our customers the ability to leverage their Truist data wherever they are, but also for us to be able to see a more broader picture of them as well inside of Truist, so that we can even better serve our customers going forward. So I think open banking really opens up some new highways for Truist and for our customers, for the future for banking for them.
This is why I love having this conversation with both of you, because I asked a business strategy question, and the first thing both of you said was, what does this mean for our customer? What does this mean for the consumer? Right? And I think that is the right way to look at this, because consumers have like a very clear expectation right now of wanting this functionality and wanting it to work well. We've even seen on the Plaid side that when consumers have multiple sort of bank accounts or fintech accounts, the one that has the best connectivity experience tends to be the one where they cluster not just all of their linking activity and data sharing, but they put more and more of their financial transactions in that one connected hub. It almost, from our perspective, starts looking like sort of account primacy in the same way that you used to sort of fight for, we want direct deposit because that makes this the primary account. That connectivity starts looking a lot like direct deposit in terms of behavior of meeting our customer where their expectations are, is making us more of a primary account for them or cementing that relationship even more deeply. I wonder, Anthony, I'll go to you and then Ursula, I want to hear your thoughts on this as well. Is like, how are you thinking about this from a customer relationship perspective? And like, what does this change and what doesn't this change about Truist's relationship with its customers?
I think from what this rule will help is it gives us a platform to communicate about this to our customers more proactively than just kind of having a behind the scenes open banking implementation that, now we're upgrading your connection to off of a credential based connection to a tokenized API connection. I think it really gives us an opportunity to say, kind of put this front forward. This is no longer sort of a behind the scenes functionality that customers will have to empower themselves, but rather here's how we think that this can actually improve your life and improve our care for our customers as well. So I think it allows us to not only give them the support and the functionality that they're looking for, but it also gives us an ability to start a conversation around transparency of their data and the control that they'll have moving forward as well. So, I think, and then on top of that, kind of some of the things we talked about just a minute ago, really having a better overall picture of our customers, so we can actually really, serve them in a much more cohesive way than just sort of the bits and pieces that we have just within our own individual banks.
I do think, that resonates with me, of the explaining to a customer the difference between transitioning to an API is that's nonsensical. I explained to my mom when I started at Plaid what I did, and she after about 45 minutes was like, I wish you just sold refrigerators so I could say what you did to my friends. So I do think that focus on what matters for the consumer here is not the behind the scenes plumbing. That's what we have to do well and what you all have to do really well.
Yep.
But what we both have to do well together is deliver the consumer experience that they want and have that opportunity to have those messages about, like, how are you keeping your data safe? How are we keeping your data safe? How are we giving you control over these things?
Yep.
Ursula, what about you and Capital One on the sort of customer experience side and relationship?
Yeah, I mean, I think it's very similar to some of the points that Anthony made. I think sort of on the inbound side, having additional information around the customers, other financial relationships can help us serve those customers better, with additional data. We have the ability to perhaps, tailor some services to that customer, and to be able to perhaps offer some things that we otherwise wouldn't be able to. So there's, from a servicing perspective and what we can offer to the customer to help them, live their best financial lives. I think there's definitely opportunity there. But then for the customers that we have that are sharing their information to other third parties, it is also an opportunity to communicate with them and educate them, right? We can talk about it, as you said, like not in terms of APIs and all the technical jargon of what's happening behind here. But, we will, I think, because there will be more of a conversation across the ecosystem and in other places, it makes it easier for us to talk about it as well and talk about their data sharing, make sure we're exposing all of the different parties that they're sharing their data to. Emphasize the control that they will have here in the ability to stop their share at any time and explain what happens to their data when they stop their shares. We've had a program in place for several years where we proactively communicate with our customers and remind them when they're sharing data, because we've seen in the past where, somebody may try an app that requests the data to be shared, and then, they abandon that app shortly thereafter, but forget to close the connection of the data, right? And that's really important. That's a place where I think we can help look out for our customers and make sure to help keep them safe and minimize the amount of data that gets shared to just what's really needed for the experiences they want. So we do, I think we really do appreciate the ability to speak to the customers more about this. And be open about what's happening so they can feel in control and they can feel better about the sharing that they're doing.
Yeah, I couldn't agree more. It's one of the reasons why the proposed rule, requiring and hopefully finalizing a requirement for the consumer to reauthorize each connection every year is, in my view, such a critical component of it. That actually is a perfect entree into, we've sort of talk big picture. Let's start getting into like the brass tacks and the details, and let's start going a little bit like anxious and like what's the good, what's the bad here. So would love if I could get one or two things from each of you, like what's top of mind, what are you concerned about as we move into implementation here? Ursula, I'll give you one that's top of mind for me that keeps me up at night is, I think you're absolutely right. You don't want that consumer to authorize an app and then stop using it, and that app gets their data forever and the consumer's not aware. The thing that keeps me up at night is on the other end of that, where a consumer is expecting an app to make their rent payment and they miss the notification to reauthorize, and suddenly a essential service that they were expecting can't get delivered. And particularly in the complex world that we're going to enter, where the consumer might be controlling their data at Capital One, at Plaid, at the app. Yes. They're going to have controls in all those places, making sure that we are effectively coordinating with both of you and making all of that work in a way that meets the consumer's expectations and protects the consumers, but also doesn't require the consumer to spend half their day thinking about their data connectivity. That to me is a real point of, I want to make sure that part gets right so that the consumer's never left in the lurch. Anthony, I see you nodding. Do you want to jump in with what's keeping you up at night a little bit on implementation mode here?
Yeah, I think some of those things. I mean, I think to your point, how does this practically impact the customer experience, right? And to your point, like I don't think a customer who has let's say 11 connections to certain apps wants to log in every or get a notification every other day that, hey, you need to reauthorize. So we have to kind of figure out collectively as an ecosystem, what does that experience look like for customers to make sure that that we're not passing pain to them, right? Like I think so it's incumbent upon us to kind of figure that out and to work collaboratively on that. On top of that, I mean, I think, the elephant in the room is the compliance states are aggressive, right? I mean, so I think there's a breadth of work here, which goes beyond technology. Some of the stuff we just talked about, but then also policies, procedures, risk management, et cetera. It's a lot of coordination that has to happen, and I'm confident that there's not going to be some major deviation in the final rule from the draft rule, but there is definitely some clarification that will be needed to make sure that we have everything prioritized correctly. But I think 6 months in the bank world is I don't know what the equivalent is in Plaid, but it's probably like a week in Plaid. I think we've had enough time to kind of set some grounding and from the draft rule. But yeah, I mean, we don't know what we don't know when the final rule drops, and so that's probably the biggest bit of anxiety I have right now.
Yeah, Anthony, if it's any consolation, I do think we move, because we're a little bit smaller than you all, we move a little bit faster sometimes. But even we were like, I don't know about a 6-month compliance window here. This feels like it might be tight for the industry to meet. So hopefully there is a little bit of movement there. Ursula, what are your biggest sort of potential challenges as we move into the implementation here?
Yeah, I think one area, and actually surprised that you didn't mention it as keeping you up at night, is the third-party risk management piece here. That the data providers have to contend with, where, there's a mandate to, yes, open up these APIs and allow the third parties to access of course, with the customer's permission. But we also have, the OCC and prudential regulators that have, put some, requirements on us as financial institutions to be good stewards of our customer data. And and not put it at undue risk. And so I think that's one of the, and really that's where, you're sort of sit between two different regulators, and there's not a lot of clarity in exactly sort of like under what, in what scenarios, we can say, let's say, block a third party from accessing the data, but remain faithful to the spirit of, the regulation that the CFPB is trying to put in place. So I think that's for us a place that gives us a lot of heartburn, is like, how do we appropriately balance that, the need to, allow our customers to share the data, but then also the need to make sure we're taking care with who gets access to their data. I think that's one of our big ones at the moment.
I think that's a big enough one that let me put a pin in that, because that might require like its own like entire subtopic in this conversation. But before we get to it, I want to make sure we're balancing the scales here with what are the biggest opportunities that you all see once the rule is finalized? Like where is the upside for this? Ursula, would love to hear yours first, and then after that we'll start talking about compliance and hopefully pull the nose out before we spend the next 45 minutes on it.
Yeah, so sure. I mean, opportunity, that's really what I think the CFPB is going for here with this rulemaking, right? Is trying to give the customers the opportunity to take their business where it can best meet their needs and make that a seamless transition. So I think around opportunity, though, there's a couple of things here, but one of the big pieces is that, on its, and I think, Anthony, you mentioned this earlier, like, we need to have great products and great experiences to start with. To entice customers to either come to us or stay with us, right? We want to make sure we're delivering the best possible services that we can. And so on the plus side, getting access to additional financial data, it will allow us to really tailor experiences to the customer. It will allow us to remove some places where there's friction. There's some places today where there's like manual processes, or like, oh, you have to call in for this thing. We would love to make, to leverage the information that we can access through open banking to help make those experiences better, make it easier for customers to manage their financial lives, open up opportunities for additional services, and maybe, create some new things that we haven't seen before. There's always opportunity for innovation, right? Obviously, fintechs aren't the only ones that can innovate. Us larger institutions like to think we can do that on occasion as well. But really, I think, that's where the opportunity is. Just continue to improve the services that we can offer and the experiences that we can extend to our customer base.
So just building on that, because I get to talk about this stuff every day, and it still shocks me that this is something that feels like a secret of the 1033 rule, is this rule does not just apply to banks. It applies to a lot of fintechs as well, anyone who's got a digital wallet. And I see exactly what you're talking about, Ursula, like a huge opportunity there where I do think, in fairness, open banking has felt to a number of banks over the last couple of years like a one-way door where someone else is benefiting and getting to innovate, and you all are not getting the same opportunity. I think fintech data being opened up to the same data sharing that has driven innovation on the fintech side and allowing banks to do that same innovation in-house is a wildly overlooked part of this rule in terms of where the opportunity is. And is something where if you're not thinking about sort of your data in strategy as part of this rule, as you're thinking about your data out strategy, you are absolutely missing what the point of this is for your business and where the opportunity lies. So I'm glad you mentioned that, because I think it is critical. Anthony, what are the number one and two opportunities for Truist that you're seeing here?
Yeah, I mean, I think along those lines, I think so, going to your point about how this has always been seeming like, oh, we're having to give this data away, and it is that one-way street. Well, I think the good part about this rule is that we now know that our peers and others are also going to be required to send that data as well. So we're all in the same boat, but also we can leverage some of that data coming in. And I really think your point that you just said is really some of the future things that we're thinking about, where yes, you can't have a data out strategy without a data in strategy, and it all should be working collaboratively together, so that you have all of your customers' consents in one place. They can manage that from a data out and data in standpoint. But then, more importantly, taking this the next step to your point of all the fintech data that's available, really modernizing some underwriting and ways that we do business today, that it isn't just always going to be the same way with now just direct pipes. There's actually a wealth of data that's out there that we can leverage that can have benefits to our customers through better servicing or care and potentially even products. But really taking it from that next step from open banking to open finance, right? And really seeing that fintech data is incredibly valuable. It'll be incumbent upon us as banks to make sure that data is being ingested and actually used correctly, right? So that it's not just sitting on a shelf somewhere. So if we're doing the same things we've always done and we're just getting open finance data, it's really not helping the customer in a material way. So I think you never let a good compliance project go to waste, right? So I think that the fact that this validates this area as a legitimate channel and something that we'll need going forward, it's incumbent on most banks not to just do the bare minimum to be compliant, but actually lean in here and use this as your go forward strategy.
That's one of the reasons I like the API mandate here, because I've had conversations with both of you and with others as well, where a number of people want to build these open banking solutions, but not unless the data is guaranteed delivered to them over a secure API, right? Like, you don't want to compromise how you think the ecosystem should be kept safe in order to launch product. And so my sense, at least, is there are a number of companies who are sort of sitting on the sidelines right now, waiting for that API transition, who are going to jump in with both feet once that's ready, because you've got the right infrastructure in place to build a solid business on. With that, I do, Ursula, you tempted me too much. I do want to dive into this compliance and risk management thing, because I think this is an area where, like, this is going to be a real challenge. We don't know for sure what the final rule is going to say, but I will do a very brief paraphrase, but it's not going to be that brief, because the proposed rule is pretty brief itself. If I can do a little bit of editorializing, it essentially says a data provider can reject an access request if there is a known risk at the data recipient, and if they have a consistent way of applying that rule of known risk across all data recipients. That is not a lot of detail of how risk management is going to work. And it's done on a background of increased scrutiny over very different types of bank fintech relationships, the sort of BaaS relationship where there is a direct business relationship. I don't think of this as being a business relationship. I think of 1033 as being a pretty distinct category of relationship, maybe one that we haven't seen before in banking. I guess the first question I would have is, like, given the guidance we have, what is the right way to think about risk management as you're building these APIs and looking at the prospect of onboarding? I mean, with Plaid alone, it's over 8,000 customers. How do you think about, like, what the right processes and partnerships are to make that work? Ursula, sorry, since you brought us into this, I'm going to make you answer first on this one.
Okay, no, that's all right. Yeah, and I think, one of the key things here is around that partnership, and I think you stated it well. Like, this is a different type of relationship. This is not, this is not just for a financial institution in any case, right? This is not your typical, like, it's not a vendor relationship. For the data that we're providing, like, there's no payment for that data. There's no payment for services in this case. Some might say, unfortunately so, but the,
some might say,
but the nature of that relationship is quite different. And so, but data is being exchanged, right? And sensitive data is being exchanged. So I think this is where, we need to look at, like, some best practices that we're doing in other areas of risk management with third parties, and try to figure out, like, what is the right way to handle this. And there's, certainly, a large part of it is going to be, cyber risk because of, the nature of, this data these data pipelines, right, that are sort of flowing back and forth. But I also think, unfortunately, this also is going to require, like, agreements with the third parties that are ingesting the data, right? There's just really, within the rule, they haven't addressed liability at all, unfortunately. And there's other things, like, yes, there are some requirements down on the third parties with regards to how they manage the data, but it's not very specific, and it's not really solid bar. So I think that's where, we are going to have to use several different tools in our toolbox in order to, feel comfortable that we're releasing that customer data. Again, it's customer permissioned, but, we are the ones that are handing it off to that third party. And so we do bear the responsibility to ensure that it's going to be safeguarded well. So, agreements will be part of it. I think certain, like, technical standards reviews and things like that will be part of it. As you mentioned, sort of any history of breaches and those kinds of things may be a part. There's a whole host of things, that would go into that consideration. But that's one of the things that we're grappling with now is, like, what are all of the things that we think we need to look at? But then also, what are those reasons that we think will be acceptable by the CFPB for us to say no, to say, oh, actually, we don't feel comfortable that, this is a party we want to send our customers' data to. It is fraught at the moment. We have not cracked the nut. We're hoping there might be some more, maybe there will be some more clarity. Maybe there'll be a little bit more in final, but absent of that, I think it's really looking at what we have in place now and what we think can translate to this space, but it is unique.
And I think, just one more thing to mention, in addition to what you said about, like, what is the line that we can draw that's acceptable? Like, what if you and Anthony draw a slightly different line? For one bank, an app is okay, and for another bank, it's not. That does not feel sustainable to me in any kind of way, but that is in some way the default is every bank should be deciding for themselves in a digital and fully connected open banking ecosystem. That feels really, really hard to sustain. But Anthony, I want you to jump in here.
Yeah,
like, do you agree with Ursula that this is fundamentally? Oh, sorry, I stole your point from you. No, I'll stop talking so you can talk.
Yeah, no, I think when we talk about and I know we'll probably broach this in a little bit here too, like technical standards, right? I mean, like it's one thing for if Plaid's going to Cap One and says, hey, are you guys on FDX 5.3 or whatever, and they know that what that means when they go to Truist and they say, are you guys on FDX 5.3? We say, yeah, and you know what that means. It's a standardized way of doing it. We need those same kind of standards on the third party side too, so that you're also not saying, okay, I'm now getting the technology standardized, and I know exactly what my APIs are mapping to and all that stuff too. But Cap One allows these third party apps. Truist allows these third party apps. There's not consistency there, but it's all because right now, at least what we see is it's everything is up to interpretation to a certain degree, right? And so that is something that I hope to see firmed up some, where there is an objective standard that we all can kind of point to say, this is why we're not allowing this third party app to come in, and that should be consistent across all of the financial institutions. And going back to the customer, that's exactly what they would want, right? If they can connect their data from one bank to their app and they can't do it from the same bank, then all of a sudden this isn't serving them in the right way. So this is definitely an area that needs to get cleared up for sure.
I agree. I don't see consumers accepting a world where some apps work with some banks and they don't work with other banks. That can't be the outcome. Anthony, one of the things I really liked about this idea of having a consistent and somewhat prescriptive approach that lets you know is, in my mind, it also opens up a greater opportunity for partnerships here. And I would almost think of this as like a first line, second line compliance, where a lot of us already in our relationships have flow down expectations through contractual DAAs of, here is the standard that we expect you to apply to your customer onboarding, go apply that standard and we're going to check you on it. That does feel like a functional way of managing this, where networks and FIs can partner together so that there is this, like, the FIs are setting their risk management expectations. They are overseeing how a network is implementing those risk management expectations onto its customer base. Frankly, I'm not sure how else you scale this, because in a different version of this, if you're all having to do it directly, like once every bank is participating in open banking, both on data out, data in, that means every bank is overseeing every other bank while being overseen by every other bank. And like that, I don't know if you have waking nightmares about that, but I certainly would. So I think that directionally is where things probably should be headed. But I agree, more clarification and especially the consistency of those standards are probably prerequisites to being able to implement this at scale.
Yeah, I always say, internally here, whenever we're kind of doing our internal dog and ponies and educating folks internally on open banking, that the real innovation here, like the three of us, we've been in this space for a while. The innovation that's needed here is less on the product and technology side as much as it is in the risk and compliance and third parties like that. And that's where I do hope we can get some, lack of a better term, third party help that can come in and really kind of help guide that, because I do think it's going to be tough for the Ursulas and the Anthonys of the world to be the ones who are having to do that education and innovation of all those parties internally. If we could have something that could be helpful to point to, that would be something that would really accelerate this, because once we have standards there, then I think the product and technology stuff is just a fast follower at that point.
Yeah, my shorthand, in case either of you want to steal it or anyone in the audience wants to steal it, is the real import of this 1033 rule finalizing is we are moving from the connectivity era to the compliant connectivity era. And it is just the addition of one word, but the three of us know how much weight that compliant word carries there in terms of all of the things that you need to change internally to make sure that you're doing it the right way. Let me give one more easy area before we move off of compliance. I want to talk about FDX a little bit, and then I want to have a little bit of time for audience questions, which is authorization management. We've touched on this a little bit before, but this also feels like a key complex area, because authorization, at least based on the proposed rule, is not something that just happens one place necessarily. The structure of the proposed rule is that consumers authorize with the third party and data providers can confirm that authorization. There's also complexity around how you do account selection, how you do data minimization, and how you do the reauthorization process. Add to that the consumer under this rule is allowed to disconnect the data anywhere they want, and whoever gets the disconnect instruction has to then tell everyone else about the disconnect instruction. So, Ursula, how do you think about doing that core like system of record authorization work in a world where it's now a multi-party authorization world where everyone owns some piece of that consumer experience and record keeping?
Oh, yeah, thanks for that easy one, John.
I want to...
Yeah, I think this is a place where, an organization like FDX, comes in really handy, right? We have a good representation of players across the ecosystem in that organization. It is looking to be a standard, like the standard setting organization here in as far as data formats go. And really, it's going to be data that helps us solve this problem. I think at its heart, the information around the authorization, it's that information we have to figure out how to, how that data can follow and flow across the ecosystem so that it goes from the third party that's capturing like the initial authorization to the data provider that confirms it. And then it can be stored in both places with that share, so that both, on the data recipient side, on the data provider side, everybody knows what was authorized and can refer back to that. The customer can see it in both places. It's finding a way to, move that, to share that data and have that sort of communication flow between the parties. I think that's going to be really important. Like, you have to sort of standardize that in some way. You have to, build the right pipeline for that data to move around between all the players at the time that it's important. And then people are going to have to hold on to that, right? Both the data recipient, any, data access platforms like Plaid, of course, that help facilitate, and the data providers, like, we're all going to need like a copy, if you will, of that authorization, and to make sure that we, are all upholding the requirements of that authorization and that, like, the permission that the customer has granted, by way of those authorizations. So I think that's really like one of the first things for us to figure out as an ecosystem is, how is that information going to be, what will it look like, and how will we share that amongst each other?
Anthony, do you have the solution that Ursula is asking for this problem? Would you mind just giving it to us right now?
Well, that's my side job. I'm doing all that stuff on the side. Yeah. No, I mean, I think Ursula's right on. I mean, I think FTX has even if this isn't 100% in the wheelhouse of FTX has the right people at that table to really help solve this, and there should be consistency there. And so maybe that's something that does happen if they are, granted SSO status, that can kind of broaden their scope of work. But I mean, I think that what we really need is something that everybody's using consistently and not something that's, individual or bespoke for each institution.
Yeah, okay, that's the only way it's
all three of us have mentioned FDX, so it's time to actually let's spend 5 minutes really quickly talking about that, and then I do want to get to questions because we've got a bunch in the queue. The financial data exchange, building out these APIs, trying to standardize some of this. I think that the current numbers are that FDX has around 90 million accounts that are being served data access via a FDX API. It's only got something like 250 members right now, though. So, Anthony, I guess let me start with you. Where do you think FDX fits into this as a set of solutions? And I will prompt you a little bit on the marketing opportunity. Although full disclosure, all three of us are on the board, so take it with a grain of salt. Should people be joining FDX as they get into their own API and compliance exercises here?
Think that if anything else, FDX is a great starter kit for any institution that's looking to get into open banking. There's so many resources there. If you're looking for guidelines on what a user experience looks like versus an API and what kind of security requirements, all of the major questions you have, if you're an institution that's just kind of stepping into here, FDX may not have all the answers, but they probably have broached all of the questions. It's a fantastic place to start. It is, I will say, of the people who are there, not just the board members, but just the membership. These are the practitioners, right? These are not just people who are, in a think tank thinking about this stuff. These are people who live this every single day. So we all bring our war scars to FDX and hope to smooth them out over time. But it's a fantastic organization. It's continuing to grow. I would highly recommend any organization that is either a fintech aggregator or bank that is not part of it to look into joining or at least leveraging the resources as a standard member of that.
Ursula, how is Cap One leveraging FDX, and how do you think about them in terms of the future of the ecosystem and particularly the next couple of years of 1033 implementation?
Yeah, I mean, I think it's a great resource for the folks that are engaged in this ecosystem. I think for financial institutions, it's helpful, as you're in conversations in those working groups where you're trying to continue to enhance and improve the technical standards that FDX has started. I mean, we've got, they're already on version 6, so I think we're beyond version 6 of the API, right? So a lot of work has gone into it, but a lot of work will need to continue to go into it. And so I think this is a place where, as a financial institution, you can bring your diverse voice and your perspective and your learnings, right? I mean, we're all sharing lessons learned. I mean, that's how we move this stuff forward and figure out what's the best way to do this. So I think it's really helpful to have all of those voices, represented in FDX and coming together to discuss some of these really hard things. I mean, these are difficult problems to solve. And certainly when you think of, all of the different perspectives that come together here. So it's very valuable to have all those perspectives to help the organization find the best possible solutions and to figure out what is the future, what are the needs of the customers that everybody is hearing in their perspective areas. And, what's the new technology? What are the new capabilities that are coming up? As a financial institution, we have, there's technology and there's new ways of doing things that we're adopting in other places. That's something that we can all bring to FDX to ensure that the industry does continue to move forward and, stay, up to date, if you will, on the best ways to use technology to continue to further the goals of the organization. Things like data minimization, for example, that's a little bit near and dear to my heart. I, co-chaired a task force that basically put together, the FDX perspective on data minimization. And, I think we're going to need technology to help us continue to do that better, right? The way that the APIs are working today allows for some granular optionality with regards to the data that is consumed by the third parties from the data providers, but there's probably better ways to do that. And so that's an example of ways that we can continue to sort of collaborate and find better ways, new ways of doing things that will help the industry writ large.
I'm remembering one of the earliest things we did in FDX was actually in partnership with Cap One, was just getting the industry to align on, of the data elements, which ones did we consider particularly sensitive and therefore should be prioritized for minimization. And Anthony, to your earlier point of like how important it is to have, you know, across bank and across fintech consensus of what the rules of the road are, even just having FDX as a place where you can have that conversation and say, let's come up with a shared agreement of what we are trying to protect and why and where we want to put an extra effort in, I think is incredibly valuable. Okay, I do want to make sure we get to at least a couple of these questions. So the first one is from Mariana Velasquez. Considering that institutions must modernize their legacy systems, what are the minimum system and technology requirements that a small institution must have in order to be able to connect with a data aggregator to leverage the open banking opportunity?
This sounds like a great question for Plaid, John.
So a great question, perhaps not a great question for the head of policy at Plaid, the least technologically capable person here. But I will say this is like, building to these APIs does not require any heroic amount of technological sophistication or skill. I think both of you have connected to some of these APIs for data out. This is not something where you need to like hire the entire graduating class of the Stanford computer science crew. It is the ability to just plug in your existing customer sign-on flows, really, to a couple of lines of code in order to implement it. You generally need some sort of digital consumer sign-on process for a product or service or account opening experience. But once you've got that, plugging into an aggregator for the data inside tends to be a relatively small lift. I think particularly in comparison to, and maybe I can redirect this part of the, or this different version of the question to you, Ursula and Anthony, what does it take to do a data mapping internally to take your existing systems and make sure that that data is surfacing on an API? Because I imagine that's a little bit more involved.
I would say that is involved. I would also say, just as a thought process as you're going through it, the capacity that will be needed to support the volume as well, right? So I think that's one thing. That it's one thing to build the APIs, but if you know they hit a rate limit at a very low amount, and or you don't have the right capacity that's set to really support the volume that you're going to be moving to that channel, that could be a limiting factor. So that could be something where the modernization of technology does make sense, of moving some things to the cloud, et cetera. I'm going to stop there because that's about where my technological expertise will go. But I mean, there are. So I would say, to your point, writing the API, open banking APIs themselves, and I'll again, another plug for FDX. It's not meant to be some giant hill to climb. It is meant to be something that every institution should be able to do. But there are infrastructure things you need to build to be able to support this. And I would just recommend starting slow and just seeing where you start hitting those walls, but expect the fact that you're going to probably need some infrastructure build out to support it.
Yeah, and if I could add on, I think the big place to focus on the infrastructure side of things is with the data and data management, right? Especially with the new regulation coming in, where you have to manage the data to the customer consent, right? What are the, how are you allowed to use that data? What can you use it for? I think that's an area that, is going to require some careful attention, just to make sure that, like, again, if you're looking to ingest that data from a third party or an aggregator like Plaid, making sure that once it comes in to your walls, you're able to manage that data appropriately and safeguard it as you're required to. So the connection is not that hard. I think the trick of it might be more in managing the data appropriately. So I think that's a place where, folks need to be thinking about is like their data pipelines, their data management, their data storage. Like, do they have the ability to handle the data the way it needs to be?
So I'm going to make time for one last question by combining two questions together. Apologies to Gene Donnelly and Roy Morrison for mushing you guys together. But the question is, what can we learn from Canada and other open banking regs that have already passed? That's Gene's question. And then I'm going to add Roy's in here. What are the chances that the US needs an open banking implementation entity similar to the UK? Why aren't we just doing it that way? Either of you want to take that first?
Well, I do think that there's like directories, stuff like that, would certainly be of value as we continue to evolve this. But I do want to give, and I mean, maybe this is us like patting ourselves on the back a little bit, but the market has really done a good job to get us to here, to this place, even without the regulation. The regulation was absolutely necessary to firm this up and to make things more consistent and standardized going forward to really be able to grow the right way. But I think I do want to give us credit for bringing all the ships forward to a certain degree. And I think the good part is, you have had some other implementations where regulation came first and the market wasn't ready. I think the inverse is here, where the regulations come and the market is absolutely ready, at least from the larger to mid-sized player. And I think that as those as some things like, I mean, it would be great. I think, going back to some of the third-party risk management stuff, if you've gone and gotten your license to drive, so to speak, to be able to leverage data for X use cases, that solves things for the banks and the data providers on that side. So I do think that there's a lot of potential structure that goes around this whole ecosystem that isn't in place yet, that we could leverage from some of our international partners.
Ursula, any thoughts from you on sort of what we can learn and why we do or do not need an open banking implementation entity in the US?
Yeah, I think that
was a big sigh.
I agree with. I know. It's like, tricky one, but no, I agree with Anthony. I think one of the big places where like the ecosystem has largely grown up without regulation, and I think it's done a really great job with regards to that. But we do know that we can't solve everything in the private sector. And as you said, like the regulation, may be, something helpful here. And this is where like that liability piece, I think would be one like really big thing. If we did have some form of recognition, accreditation, or registration, like whatever you want to call it, to take care of that liability piece, and also and help us with that third-party risk management, that would be huge. I think that really takes a lot of burden off of all the players in the ecosystem. It would allow for, it may even allow for us to, move forward without these, bi-party agreements that we have, that are in place today, right? So, because every third party that accesses the Capital One, external APIs for open banking data, like we have a contract, and that contracting process is arduous and nobody likes it. But it serves a purpose because that piece is missing. And so, I think that may be one key place where, it would serve the ecosystem well and really sort of like unlock some things and allow it to really scale.
Yeah, I mean, I think we joked at the very beginning because I had a misstatement and said Anthony has signed 20 million data access agreements, and we all joked about like whether that was an aspirational goal. I do think one of the things we can learn is even in other open banking markets where the number of FIs and fintechs is exponentially smaller than the US, they have not solved this problem with contracts, right? It does not work at that scale. Like you can't spend 2 years negotiating each contract and actually get 20 million contracts. So right. I do think one of the key learnings is going to be, how do you scale this? How do you make it work in implementation without having to do a manual bespoke process for every single thing that you're doing? Mm-hmm. So hopefully for those of you who have tuned in for the whole thing, this has been helpful. In the next couple of weeks, this final rule is going to come out, and all of us are going to shift into implementation. Please, continue to look for more content on these issues. I know Plaid will be doing some of them, but Thank you all so much for joining. Really appreciate your time. And a special thanks, of course, to Ursula and Anthony for spending this last hour talking about how we're going to get this rule done and implemented. Thank you.
Thanks, guys.
All right. Thank you.